Welcome to Core Finance, joined by Matt Brown. Morning to you, Matt.
Morning, Moose.
Let's kick off market movers. Headlines this morning. Equity markets pressured after weekend North Korea atomic bomb test. This is all getting pretty serious, isn't it?
Yeah, and it's deja vu. Bit of O-level French there. Same here again. Every
Monday morning.
Monday morning, first day of the week. It's North Korea. Things going on there, and obviously investors, as we mentioned on Friday, taking risk off the table, not wanting to hold positions into a weekend, and lo and behold, North Korea has an atomic blast that has got the world going again. But this news it's starting to become more commonplace, and it's now how the markets react to that. And we're looking at we saw moves in dollar yen, albeit they have bounced back slightly. Gold is going off to the moon, 11-month highs, and people are looking at, they're not only trading gold, they're looking at the gold miners, looking at gold ETFs, and that's the insurance policy against global economic political woes that they're obviously very clear and present at the moment. We've talked before about cryptocurrencies and them potentially becoming the new safe haven currencies. However, this morning we've seen Bitcoin trade off about 10%. Ether, which is the new darling in that sector, is off 21%. So investors, be aware if you're looking at cryptocurrencies as safe havens. That's the key thing. It is Labor Day in the US, so we're not going to see a market reaction from the US. What we have actually seen before is a sell-off in Asia, sell-off in Europe, and then actually the US has performed quite well. The Nasdaq was performing very well last week, so it's going to be interesting to see tomorrow how the US reacts to all this news. There's going to be a lot of rhetoric obviously coming out. We haven't heard Trump as yet say anything about North Korea, but South Korea are upping their testing of ballistic missiles as well in response to this North Korea threat.
Understood. Right, let's kick off with the FTSE 100. One to watch, Reckitt Benckiser, world-class company.
Well, not so much. I mean, world-class, four members, key members are stepping down from the company. This is the head of IT, head of HR, to name a few, and marketing as well. So they're moving on to other roles away. Bit of a kind of boardroom reshuffle for Reckitt Benckiser. This is in after they took on Mead Johnson, a US company. So they're looking at how they're going to manage and who's going to manage that. But certainly, some big names stepping down from the company is never positive. So the stock's trading off about 1%. Obviously, the market's off quite a bit today anyway. And the FTSE as a whole, it is interesting to look at this 7,400 level is a key level. And it was tested earlier on this morning, has bounced back up again. So a bit of resistance there. So looking at FTSE stocks on the back of the North Korea sell-off. A good one for technicals.
Right, let's move on to small cap. Obtala Resources Limited, been on the show as a CEO interview before. What's caught your attention this morning?
Just a little thing, Beaufort Securities, who kindly sponsor this show as well, so we're aware of what they're doing on the broker research front, have come out and said this AIM stock is a speculative buy. There's been, I wouldn't say issues, but there's been a delay in some funding, 4 million coming through, and they're aware of that. But they like the board and saying, look, if they can get those issues dealt with, then the stock's one to watch. I think they've got a price target around 20p, and it's speculative buy if you're in that space.
Understood. Let's move on to the currency market. The Great British Pound, Euro, Great British Pound cross 91.85. Cable, British Pound against the US dollar, 129.45.
Yeah,
dull.
Yeah, very dull. A little bit of bounce for cable. This on the back of maybe a bit of dollar weakness again, tied in North Korea. But also working on the political front. It's back to school for the UK Parliament, and Brexit is really going to be at the fore of discussions that we see over the next few months. So that's going to dominate the headlines now that Parliament is back sitting.
Broker upgrades, downgrades. Jefferies HSBC today is a new buy recommendation.
Yeah, Jefferies have initiated a buy recommendation on HSBC. Global Bank has gone through obviously the credit crunch and performed quite well obviously to its exposure to China, its exposure to Asia. They've got a price target of 9.20. The stock's trading around £7.50 at the moment, having been about 5.70 last year. So they see continued upside. The banks, global banks, have performed very well. The big names over the past year really kind of driven on by the Trump bump. So, but look out for HSBC.
There's a new buy. Right, let's move on to the core number, 28%. What's the 28%?
Well, actually, speaking of global banks, this is very interesting. Now, it's a report. It was actually in the City AM article today, but it was a report by a company, Bain and Company, who are a consulting firm. Now, they've looked at 111 European banks.
Right.
And something to worry about here is a flashing red light.
Is this the pass rate or the fail rate?
This is the fail rate. Now, the pass rate is about 36%, which is fine, but 28% of banks are high risk. Now, the majority of those sit in, you won't fall off your chair, no surprise, Italy, Greece, Spain, and Portugal. So it's that peripheral banking sector. Now, Europe is performing well at the moment, and we've seen that with the euro, obviously the strength going from strength to strength, and macro data coming out. But there's still this issue that hasn't gone away. And if we start to see, we've talked on the show before about consumer credit, and maybe that's another bubble forming. Any issues there? If 28% of banks are failing stress tests by this consultancy firm, that could cause another problem further down the line. So be aware of that.
Let's wrap up now with the economic calendar. Obviously, the US on holiday. Midnight tonight, BRC retail sales in August, and in Australia, the RBA rate decision.
Yeah, two things to look at. I mean, these aren't major macro points, and the only macro point is we're hitting the tape now is the Euro PMI data, so take a look at that, traders. But look out for the BRC retail sales. Could be quite interesting. We had some weak, actually, PM construction numbers out earlier on in the UK. But the retail sales for August, it was a mixed bag with regards to the month and weather-wise. But we had a stunning bank holiday, and that may feed through. We've seen that before with the sales of ice creams and barbecues and clothes, etc. Look out for that. But I think the key today is we're going to be in a little bit of a holding pattern. We don't have the US really to direct where we're going to go, and without any major macro data points, it could be a bit of a flat day.
Sounds like an excellent opportunity for an extended lunch.
On a Monday, why not?